Hello, everyone. This is Stock Market Daily. Thank you for joining me today. It is June 13th, 2023. As always, this is not financial advice. Please don't copy my trading strategy because you will lose money. This is only for educational purposes. So, today, as you could see, the market had another really strong day. This is coming off the pre market data that was released for the CPI. The market definitely thought that the data was a good sign that the inflation is slowing and gave us an indication that tomorrow the FOMC meeting is going to result in an announcement that the rates are going to be, they're not going to be raised, and they're going to be paused. They're going to pause on raising the rates. Also, tomorrow morning, pre-market, we're going to have the PPI, the Producer Price Index data come out. So we'll be watching that as well. So not much to say about the day overall. You could see that we had a gap up that looked like it was maybe going to fail, and we hit a lower low here. And I thought that we might be closing the gap, but the bulls were in control and brought it back up, and we kind of stayed up in this range the entire day. In fact, I was kind of surprised that for the past couple of days, we ended up, towards the end of the day, we ended up at the highest. Well, we ended up running into the close a little bit here and here and the day before that. So something to just keep in mind when, especially if you're trading the SPX and you're waiting for the end of the day for the options to expire. And if you have some on the call side, just keep that in mind that for the past few days, we have been kind of holding the close pretty strongly. Let's take a look at the trades today. And if you've been following for the past couple of days, I've mentioned that I was on vacation, and my trades that I placed while I was on vacation were for on the call side and the put side, and the ones on the call side obviously got trapped in the money because because obviously I was away from the computer and I wasn't able to do any of my trading, so I kind of spread them around. I didn't think that they're going to we're going to run up so fast on the debt ceiling talks. But anyway, so today I actually placed two trades on the put side. I did try to get the 4330 the 4331 filled at for $380, and that did not happen because the market started going up fairly quickly. But I did get these two filled right here. And I am being very cautious on the put side, obviously, because we've ran up so much so fast over the past couple of days. So putting in more than two, I do get a little nervous. Three would be my maximum. And usually I put in four at a time. On the call side, I did not place any trades because I already had three that were deep in the money from prior days. I had to roll them. So for tomorrow, I have no trades, and most likely I will not be opening up any new trades tomorrow for the FOMC meeting. Very possible. Well, I can't open up any calls, but very possible that we might have a big sell-off. Even though, but let me take a step back. Even though we might have a big sell-off tomorrow, we do have quite a bit of a cushion because we have been running up. Here, let's take a look here, 10 days. Even if we do sell off, we do have quite a bit of a cushion. So if there's any premium in some of these really, really low options, right, at 42.50 or 42.20 or something, I doubt that there will be. We'll see how the day progresses. But if we start selling off, and if there's any premium in these very low strike prices, then I might take the chance and place a few put orders on there, or I'll sell a few puts to be more specific. But if we're in this kind of range right here, and we're not seeing anything that is remotely worth putting that much risk into, in this area 42.50 and below, then I don't think I'm going to take the trade. So basically what I'm saying is, if they do decide to raise rates once again, we might as sell off and sell off hard, probably 1.5% or maybe 2. And I definitely don't want to be caught on the downside because, we're going to probably keep selling for a few days thereafter. Now, in terms of the rest of the options, like I said, on the call side, as you could see, this is for the 15th. I have one that's really in the money at 42.15. I have another one at 42.30. I have one more at 42.40 and 42.80, and that's just on the 15th. I have more going on here. So it's definitely there's definitely quite a bit of miscalculation on my part that I didn't think that we're going to kind of rally up that high. And even I believe it was on Monday, I took another trade and I placed it for July 12th. I placed it on as a credit spread for this. I sold this 44.50 and I bought the 4800 level. We're actually starting to look like we're fairly close to this level, and it may not even be that far away. By that, if we're going to continue kind of creeping up here, by almost a month away, this might actually be in the money as well. But we'll see what happens. I'm not making any predictions at this time. I'm just basically going to keep on rolling out these options if I need to. Obviously I hope that the stock market goes up, but at the same time, for me in this case, I do hope that we go down a little bit so I have a chance to get out of this. And if we do go down, we will see higher volatility and more premium come back into the options. And by the way, the VIX is running up towards the end of the day. So if we take it the VIX 1 day, VIX 1 day, you could see that for the past couple of days, pretty much for the past all the days, it's been running up into close. But for the past couple of days, it's been really increasing. I don't know if there's much that it changes in terms of the option premium on the SPX, because obviously the options are expiring as this volatility is increasing, but you could see that this is really increasing for the past couple of days, and it's due to two reasons. Number one, I think that as we do trend higher and higher, people are going to be taking profits at some point, so we should be kind of probably pausing, this rally for a little bit, or maybe slowing down, and there could be a possibility that we might come down a little bit. But most likely this is due to the fact that we have the FOMC meeting tomorrow. So, okay, I think that is it. As you can see, the trades, the trades that I've been placing have been not as fruitful as the trades, just a few weeks ago, but it is what it is. That's part of trading, and we will eventually get back out of it. And it's going to take some time, most likely, but eventually we'll get back to the days of profit where it's been before. I'm hoping and I'm assuming that eventually that will come. Certainly made enough money in the past couple of months to have it slow down and be, not as profitable trading, but definitely still making money. So that's the most important part. Not losing money, just continue to roll the positions, and eventually, you might be rolling at a couple of strike prices at a time, but eventually what will need to happen is we'll have to roll out a week or two or whatnot, and move it more than a couple of strike prices. And after you get one position out, you could take your the one that's losing the most amount of money and essentially break it up into multiple positions. And obviously, you have to be careful. As long as your account can handle it, you could definitely buy these 5,200 strike price options fairly cheap, but and roll out the ones that are in the money. But obviously, if you increase the strike gap, then you are going to be having more collateral in your account for that to happen. So eventually it will work itself out, but it's just going to take some time. So tomorrow's gonna be an exciting day, and we'll do another video tomorrow. Thanks for watching, and see you tomorrow. Bye-bye.